This is Cece. Welcome to the Orbit. It is Monday, December 11th, and as it is Monday, this is Income from Options Weekly. As we look at some of the setups for those that like to sell credit spreads, iron condors, credit call spreads, credit put spreads, things like that as an income from options strategy. So once again, we are at very low volatility. As you can see, we've got about a 0.4, 0.5% expected move in SPY for each day for the 0 DTE, and we have a 1.3% expected move for the week. Now, 1.3% move is actually higher than the last week or two that we've seen. And then after this week, volatility comes back in after we get through this week. So why this week? Well, it is because we have a couple of big economic events. We have the CPI and we have the FOMC. And you can see this on the chart. If we go to the 1 month chart, you can see this big bulge this week, and then it sort of, flatlines into year end. Not flatlines, but a regular predictable outward curve. But we have this big immediate bulge out this week. And what that is, that almost looks like an earnings report or something like that. Now, the difference in volatility isn't that much. We're looking at, vol this week of, let's say, 2017. And then afterwards, we go to 13 and 12 and, back to what we've been seeing. In fact, even on the low side of that over the last few weeks. So if we were looking at an iron condor for today, let's look at the strikes and sort of the risk reward and the premium received. We are going with, at the expected move, that gives you at about, the way the stock's lining up, of 458 and 462 short strikes. So let's, as we always do, and that's, if you're looking at this in delta form, that is about, at the 20, 25 delta level. And if a lot of people like to see that at the more like the 15 delta level. So we're just going to take that and expand it a little bit. And of course, we get the, we're risking more to make less, but we have a much higher probability of profit. And as you can see where that expected move now, the short strikes are 463, 457. So that's a good way to look at it. Other folks like to sell into a rally with the credit call spread. And then they like to, if the market reverses back and mean reverts, they like to then sell the credit put spread and leg into iron condors. Right now, the market is down slightly, not much, well inside the expected move for today. That's what we're looking at on SPY. Now let's go out to the weekly and let's see what the, with the economic events this week, the market could move, or we could just see it continue to pin. And if that's the case, if the market reacts sort of ho-hum to this economic data and the FOMC and the Powell press conference, then you are getting slightly higher volatility this week than you would be the last couple of weeks, and most likely into year end. So let's look at the let's look at the iron condor just for the week, and we've got levels of about 454 on the short strike to the downside and 466 the short strike to the upside. If we take this out a little bit, there are, there's a little bit of room on a trade like this that has a few days. You can actually go several strikes before you're getting to that kind of, 25, 75 risk reward that we're looking at right now, which is 452 strike and 468 call as the short strikes.